YouTube.
All right. Let's see. Let's wait for people to come on in.
What do we got going on, man? What happened over the weekend?
There was the Canelo fight, man.
What?
You watched the Canelo fight?
I did not.
Oh,
What?
Canelo, man. I forget the dude that he fought. I forget his name, but supposedly a good contender got his butt kicked.
I heard him and De La Hoya have some beef.
Ooh, that's a good one. That's a
I
good
saw.
one.
I just saw a real quick clip of De La Hoya, like schooling Canelo, going, "Hey, listen, you were under Golden Boy Productions for however many years. Give me some effing respect."
Well, if you listen to
Damn.
Canelo's like, this guy will rob you. Make sure your attorneys are looking at all your paperwork.
No
Make
shit.
sure that everything's squared away because he will rob you. Anyway, we're here for your home loan questions. So if you got questions about programs, how much to put down, what credit score you need, what's available for first-time home buyer, what's available for investment buyers, second homes. We're recently looking into construction, so don't ask us construction questions yet. But make sure you fill up our chat box with all the questions that you guys may have. We'll answer every single one of them and call out your name.
So we're going to talk about the rates. Right now, the FOMC has the rates at 5.25, and 5.5. If you follow what the Federal Reserve has planned for the next 2.5 to 3 years, all of them come down to a consensus at 2.5% in the end of 26, beginning of 27. So the Federal Reserve actually has the plan of going down. This is on the FOMC website. This is the Federal Reserve. These are the guys who control the monetary policy. And this is Jerome Powell, chairman of the Federal Reserve. This is the guy who speaks and literally moves markets. So I know things are tough right now. Things are really tough buying a house. But the truth is it's a buyer's market. Hard to believe, but it is a buyer's market. You know when it's not going to be a buyer's market? When the interest rates go all the way down to 2.5%. Do you want to know why? Because right now, we can just pick a number out of the sky. 30,000 people. Every month, there's 30,000 people who would like to buy a house. 30,000. But because interest rates are high, 7, 8%, these people can't afford it. So they just say, I'll wait till the interest rates go down. And that's called pent-up demand. We have 18 to 24 months of pent-up demand. As soon as the rates start coming down, oh my gosh.
Yep. All right, I got a question from Hannah. What's available for first-time home buyers? I'm in Colorado. Love Colorado.
Well, Hannah, we got this one proprietary program. First off, most programs, most of them are local. Meaning like in California, we have CalHAFA. In Texas, they have Texas ones. In Colorado, they have Colorado ones. But at New American Funding, we've got one unique proprietary product that's not in any other bank that goes in all 50 states. All 50. And what's the best feature?
Well, she's asking about first-time home buyer.
Yep.
So there's actually two in the nation.
Okay.
Two in the nation. And what we're talking about is Freddie Mac, Fannie Mae, Home Possible, Home Ready. So for first-time home buyer, the benefit is 3% down. 3% down. Now, if you have great credit, this may be the program for you. You get in with only 3% down. If you have crap credit, you're probably going to want to go FHA. And here's why. FHA is only 3.5% down, but the MI is locked at 0.55. So regardless of your credit, if you're at a 580 or an 800, you're still going to be 0.55. Okay. Also, with FHA, you don't have to necessarily be first-time home buyer. You could be a repeat buyer. So let's say you owned a home 2 years ago. You don't qualify first-time home buyer, but you can get in with FHA. So first-time home buyer program, there it is, 3% down. What he's talking about is a proprietary down payment assistance program, which will allow you to get in at a 600 credit score. So if you want a down payment assistance program that's better than probably most cross country, we have that for you too.
So we appreciate you guys. We are live on Facebook, Instagram, TikTok, and YouTube. Bring all your questions, whatever you got. Zachary McFay. Zachary says, hey, how do I buy a mobile home for $40,000? So Zachary, I got some kind of good news, bad news for you, and here's what it is. Good news, bad news. So, Zachary, most banks don't want to do loans less than 100 grand. Some will go down to 80 grand, but most of them don't want to do loans less than 100 grand. And here's why. Because when the Dodd-Frank crash happened in 2008, 9, 10, 11, 12, the loan officers and banks were not innocent. They were kind of bad guys. Yeah, all of them were. There's not one bad guy. Everybody was a bad guy. But the person responsible for allowing you to get the money was the bank, the loan officers, and so on and so forth. So they created our job. Our job, NMLS, didn't even exist until 2012. And then when they did exist, they put in a whole set of laws. And the laws say the bank can't charge excess exorbitant fees. And when you get to about $100,000, all the closing costs and all the other fees that come involved, they start to create what's called an HPM. That's a high price mortgage. And because of that, the banks steer away from these loans. So if you're buying a mobile home that's affixed to a permanent foundation via a 433 and an engineering cert, then you're actually buying real estate. But at that point, you want to start at about 80 grand or higher. If you're buying a mobile home that has wheels on the bottom and you can hook it up to a truck and drive it wherever you want, that's not real estate. That is a special type of financing that we don't get involved in.
Yeah, Tuber Ted, buy now and refinance later. You got it, bud. That's the strategy. That's the move right there. Did you say AA? Thank you for the love. One more. Thank you for the love. Scott Tim. If my aunt gives me money for a house, does the bank need to know how my aunt got the money?
Kind of. Okay, this is a gray area. So, there's a way to deal with this. Now, if you're bringing in your own money, the bank wants to see that you got it. You've had it in your bank for about 60 days. What they're really looking for is money laundering. If you're doing drugs, if you're doing something illegal, they want to know that you didn't just rifle some money in here and buy a house to wash your money. So they want to see 60 days. They call it seasoning. So we need 60-day seasoning. However, when you're getting a gift from grandma, grandpa, mom, dad, brother, sister, cousin, whoever, it gets a little unreasonable for them to go, hey, listen, we want to see your grandma's last 2 months bank statements. Now, can they? Maybe, but they usually want to know that it's been there for a month. And there's a little trick. I don't know if it's a trick. It's a technique. Go with technique. And that is wire it at escrow on closing.
Yep. So depending on the loan type too. So if you're going with a federally backed loan like FHA, VA, USDA, they're probably going to want to see a bank statement. If you're going conventional and your file is clean, they probably won't ask for a bank statement. That being said, don't do the big F word. Don't do the big mortgage F word.
What's the F word?
FRAUD.
Okay, yeah.
There. I don't want to say that.
JCAA08 shared the live. We appreciate you very much. One more followed the host. We appreciate you. What do we got?
Zachary McFay, Michigan, 29. I guess 29 years old.
29 years old.
70K a year income, 650 credit score. Buy a dream house now or later? Dream house?
Dream house? I'm going to say you're going to buy your dream house later. Buy your first house. That's probably a better move. Here's why. Zachary, the prices I'm going to talk are a little bit out of your range, and I'll give you your range in just a second. But here's how it works. Let's just say that right now, in this market, what are rates at right now?
Let's take a look.
Perfect rates, 15 years, 7.86, start that over.
Slow.
15 year, 6.875. Conventional, 15 year. 30 year FHA, 6.125. I was giving the API.
Go like this.
6.125 on a 30 year FHA. 30-year VA, 6.125. Now, that's not my quote to you. That's what New American Funding is putting out to the world. Don't believe me? Go to the top where it says links. Go to cool stuff, and you go to today's rates, and you'll see the rates that I'm seeing. But let me give you a little hack. Here's the hack. There's the rate that they put out, and then there's the APR. The APR factors in any cost that it takes to get the rate. So on that 6.125 interest rate, you'll see that New American Funding is putting out 7.35 APR. Now, for an experienced finance guy, you go, wait a minute, those are too far apart. What's happening? And what's happening is you're buying down that rate. You're buying it down to 6.125. Anyway, rates are at 7%. And let's just say you're going after a $500,000 house. $500,000 house in today's market. Well, because there's not a lot of buyers out there because rates are in the sevens, there's not a lot of offers. So the days on the market become a lot. 30, 60, sometimes 90 days, depending on pricing. And because of that, the buyer can come in and like say, hey, I want a discount. I want you to cover your closing costs. However, when the rates go down and rates are in like the 4s and 5s, you're going to have 15 offers that opening weekend, and it's going to drive the price up. That's why it's a buyer's market right now, even though it doesn't seem like it is.
So, Zach, buy now, man. Buy now.
Buy now.
The guy said it up top. I forget his name, but thank you for that. Buy now, refinance later. Get the best of both worlds. Armani, at what year are you considered first-time home buyer again?
You take that.
Easy. Very easy, Armani. 3 years after you last owned. And we're going to look this through the title profile. So we're going to actually pull your last address to see when that transferred title, okay? But 3 years. Once you've seasoned 3 years, your first-time home buyer again, you now qualify for those 2 programs that are first-time home buyer and some down payment assistance.
Most people don't use those programs.
Never.
They're they're so built up like, hey, I get my first-time home buyer program. Do I qualify for first-time home buyer program? What people universally mistake that with is FHA 3.5% down. That's not a first-time homebuyer program. That is a primary residence program. Whole different game.
Not just that. There's only one real spot that you're going to use it. Only one real one, regardless of MI.
Where is that?
A condo purchase and you want to put 3% down. That's it.
Yep.
That's it. Because condos sometimes are not FHA approved because it has to have a percentage of primary residence. But aside from that, FHA all day. Karina G. I'm happy I bought 5 years ago at 2.3% interest rate.
2.3. Kara G. Don't tell anybody about that. They'll be jealous. The whole world will be jealous about your 2.3. I'm jealous. I'm in the 2s, but I'm not at 2.3.
Me either.
What are you at?
2.75.
2.75. I think I'm at 2. Call it 2.8, maybe 2.6, maybe somewhere in that range, but not 2.3.
Anyone in the 2s kicking ass, but you're kicking everyone's ass.
Yeah, everybody's going to be jealous.
Vicky, thoughts on Bitcoin?
Ooh, you ready to open a Pandora's box?
Let's go.
Okay, Bitcoin. It's a giant scam, and it's one of the best investments in the world. It's a giant scam, and it's the best investment in the world. Okay, so let me tell you, what's this? How are you going to be both? Okay, first you have to understand the way our fiat currency works. Fiat currency. What is fiat currency?
This is where finance man kicks in.
What is fiat currency? Fiat currency is a made-up currency, not backed by anything. Fiat currency, like the gold standard, used to be what the dollar was backed up by. But now, it says, in God we trust. So, the Federal Reserve basically sets the value of the dollar. And this is the challenge, and I will say also the benefit of our system. Why? Because they can print more money when they want to, or they can bring it in whenever they want to. It is not a substance-based currency. Okay, so what does that mean? That means it can get out of control. That means that if this guy, Jerome Powell, does not control our inflation situation, we could literally go bankrupt as a country. You can't do that. Yeah, you can. Yeah, company.
It's a company.
Yeah, it's a company. You can literally go bankrupt. Okay, so what's the big deal with Bitcoin? Bitcoin is a technologically based currency that limits its ability to print. And because of the limited ability to print, as long as we observe it, like not only the U.S., but I don't know, France and England and whoever else is observing it, is a way to exchange value. And because of that, it can't be controlled. Well, wait a minute. If it can't be controlled, what happens? Because there's 2 parts to Bitcoin. Part of it is you own it and you buy things with Bitcoin. That's part of it. What most people are talking about is the investment. And the investment is the perceived value of Bitcoin, not the actual value of Bitcoin. Many places take Bitcoin. Many. And more are taking Bitcoin. But most people are talking about it from, hey, should I invest in Bitcoin? And at that point, it's a speculation situation. So, it's a giant scam and also one of the best things around.
So confusing. Armani, my credit card allows me to transfer up to $40K into my account with 0 interest for 28 months. Are you just showing off, Armani?
I guess so, man. It's like, hey, I got a 40K
pretty
credit.
good damn deal.
That's a good deal right there.
Free money for 28 months?
Yeah.
Let's do it. Darius followed the host. Karina G told Zach, yes, we bought our house 5 years ago and waiting on my dream home.
For later.
Yep. Armani said, safe to use for down payment. Oh, the 40K. Now we're going to understand. So, 28 months? That might be ideal. No, okay, let me tell you why I'm saying this. So, according to Lee's chart here of when the rates are coming down, okay, here's what's going to happen, guys. So, we seen it in 2020. Don't act like you didn't. Values were here. Interest rates were here. Interest rates pushed down. It floods the markets with buyers. Values skyrocketed, okay? So, if you put a minimum down payment of, say, call it 3.5% on your home, and then you refinanced after that spread happened, you probably had enough equity to remove your mortgage insurance, definitely drop your rate, which bottomed out your payment, okay? So if you're saying $40,000 access from your credit card in 28 months, we may be in very great territory with interest rates. Now, we're told that we're supposed to have 3 reductions this year, then we're told 2, not told, but speculated down to 2 and speculated down to 1. Mm-hmm. But when that 1 does kick in September, the flood will happen. The floodgates will open. Everyone will pour in because they're responding to the news. The news is going to say it. The news is going to say, hey, great news. The interest rates are down. The Fed officially lowered it for the first time. And then home buyers are going to flood in. And then it's going to do it again. More flood, more flood, more flood. And then in 28 months from now, the equity is going to spike. You're probably going to want to refinance, take that money out, pay off your credit card, and have a dirt cheap interest rate. So, Armani, if it were me, I'm a bit of a gambler, so know this. I'm a bit of a gambler. I would probably make that move. What would you say?
Well, yeah, I would make that. Well, there's a few other things, too. There's certain programs where you can't have borrowed your money for the down payment.
Now, there's that.
There are some programs where you can have borrowed your money for the down payment. I just have to factor in the monthly payment. Now, if you're 0% interest, that's great, but that doesn't mean 0 payment.
Yeah, correct.
So I have to factor the payment in, and that is going to affect your overall interest rate. But the one thing, this guy, Jerome Powell, the market is panicking. And you know why the market panics? Because it's clickbait. If they scare you that, hey, you got to do something today. Oh, you got to do something fast. Oh, the world's crashing. Oh, no, everything's going to hell in a handbasket. They'll get your attention. You'll dig in and read their article, and they can make some money. This guy hasn't freaked out. He hasn't. Even though things didn't. CPI came in about 2 months ago. It was supposed to be at 2.9. It came in at 3.1. About a month ago, it was supposed to be at 2.9. Came in at 3.2. And then most recently, it's supposed to be 2.9. Came in at 3.5. And you know what he said when he got cornered? He said, yeah, it's not moving as fast as we expected. That's it. He didn't panic. Didn't panic.
He's got a guaranteed paycheck, man.
And he still said, hey, I pretty much believe we're going to have what we had started out with the economic cycle, stating that we're going to get 3 interest rate reductions in the calendar year 2024. And when I said that, he said, I told you it was going to be a bumpy road. It was not going to be a perfectly smooth pitch. And we're experiencing those bumps. The economy is a little bit more resilient than we expected. Now, there's 2 big levers that the Fed has to pull. 2 big ones. The main one, which most people look at, is called the prime interest rate. That's prime, and that's the Fed funds rate right now at 5.25 and 5.5. But there's another one, and that's called quantitative easing or quantitative tightening. And a lot of people don't know this, but the U.S. has been pulling back in funds at $95 billion a month. $95 billion a month. And Jerome Powell actually addressed it in his most recent speech, and he said, hey, we anticipate dropping the Fed funds rate, the quantitative tightening to 60 and then 35 billion as of June 1st. He actually gave a date. Now, what does that mean? That means that he is using one of the levers to free up more money in the economy. Not the prime that everybody looks at, but the quantitative tightening on the backside. When they really want to go gangbusters, they'll drop the interest rate all the way down and put money into the economy through quantitative easing, And that's when money just rains everywhere. Everybody gets rich. Everybody makes money. It's a wonderful thing. However, real estate increases so fast. It's insane. It's ridiculous how fast it goes up. Anyway, you guys have been so helpful. User 8306.
That's Kitani.
Is it?
Yeah.
You guys have been so helpful. I am now under contract. We are here for you. We are helping you.
Darius.
Get house.
This was Robert thought this was Robert Garcia, the famous boxing trainer. Oh, you're
Me?
Robert Garcia, man.
Is that me?
I don't know.
Get in there. Get some jabs in there.
I'm gonna call it you.
I don't know.
Miss Jasmine, single, low income earner, average home in Texas is Tennessee, $230,000, 30 to 40 cash will not get far. What to do?
Well,
what is your income?
yeah, that's
I
it.
know you say low, but what is it?
Hey, Miss Jasmine, all loans are based off of risk. How much risk is in it for the bank? So, if you've got a very high FICO score, what's a very high FICO score? 800. If you have a very high FICO score, that means you pay your debts on time. If you pay your debts on time, then that mitigates the risk for the bank. What's another way to mitigate risk? High down payment. If you're putting a lot of money down, that mitigates the risk for the bank, so they're more likely to say yes. If you have not a high income, then these are two ways you can offset that not high income. Make sure you pay your debts on time and have a very high FICO score, and more money down gives you more house.
Yeah, and so here's something else, guys. I just want to be honest with you so you know what to expect. If you're in the $30,000 to $50,000 income range per year, start lining up cosigners. Mom, dad, sister, cousin, brother, friend, enemy, doesn't matter who it is. Make sure you line up a cosigner, because if your dreams are to own a home and you're in that range and you have car payments and other debts, it's going to be very difficult, but that's the reality of it. We're in the interest rate environment that we're in. Zach McFay, if I buy a house now, $500K, what if the price of the housing goes down? It's worth $350. Do I still owe $500?
Okay, Zach, I'm going to answer this, but I'm also going to tell you you're living in fantasy land, because a house going from $500 down to $350 probably happened 2 times in the history of the United States. 2 times. One was the Great Depression.
You were there.
Which was over 100 years ago.
What was that likely?
It was amazing. And then the second one was the financial collapse of 2008, 9, 10, 11, 12.
I was there.
And he was there. So it did go down, and they went down that amount. It went down that amount. But will it go down that amount again? I'm willing to bet no. If it does, it'll be in 2030 to 2032. I can give you reasons for that. But will it go down now that much? Probably not. Anyway, if I owe $500,000 and it goes down to $350, do I still owe $500? Yeah, you borrowed $500. You owe $500.
Yep.
The banking system has a way to deal with this. They do. What are they called?
Modifications?
They do modifications, because the bank knows, hey, if it's worth $500 and the market, if you paid $500, the market's only worth $350, it's not brain surgery. You're going to walk away, and the bank's going to take the hit. So instead of doing that, the bank says, hey, you know what? Tell you what, how about if I modify your loan and we bring it down to less than $500? They don't always go down to market, but this happened a lot. So much that scam departments opened up in Orange County in order to do loan mods for people across the country, and a lot of people went to jail and got Lamborghinis in the same year.
Yep. Absolutely.
Same person.
Like, I'll see you when I get out.
Yeah,
Got a lot of questions, guys. We're going to
Lamborghinis.
get to every single one of you, so just hang in there with us, okay? And also, if you're ready to get started, go to the link in the bio, click on apply for a home loan now. If you have crap credit, go to the link in the bio and fix my credit. If you want to get the side hustle, go to the link in the bio and click on side hustle. It's just, or is it just life? It's life. That's all it is. So
It is just life, but there's also business in there, because the bank knows you'll walk. They're not stupid. They don't build those big buildings by being stupid. They know, hey, listen, I can either modify and this guy will pay me because he lives here and his family lives here and his kids live here and they go to school. He'll pay me. Or I can foreclose. He's going to destroy the house on the way out. I have to clean the house up, and then I still get $350 anyway. So the better move for the bank is loan mod, and actually exists in the system already.
Yep. When you were talking about Bitcoin, Darius hopped in and said, I understand. Yep, he's right. Vicky, I've made 20K on Bitcoin in the last 2 months. Bitcoin went up this past run, right?
Vicky, that's great news. I'm glad to hear that. Glad to hear that.
I'll buy a house.
Yep.
AI tattoo. Oh, thank you for the love.
What's up, AI Tattoo?
How does co-signing work for mortgages? My mom offered to help co-sign. I just don't know if I want to. So here's what it is, AI Tattoo. There probably isn't a better time for a co-signer. And it's the same situation I told that person up top about taking money out of their credit card. In a very short window of time, interest rates will go down, values will push up, okay? What you need is a better interest rate to get out of that situation of your mom co-signing. If your income skyrockets, that's going to help you.
Yeah.
But if your mortgage payment drops because of interest rate, if your payment drops because we're removing mortgage insurance, there's an opportunity for you to refinance out of that. Now, the bottom of it, according to this chart that Lee keeps showing you, that you can find online, guys, it's not our chart, says that our bottom of our rates are looking like 26, 27, okay? The year 26, 27. That's only 2, maybe 3 years out. Most people have to wait 10 to 15 years to refinance out of it because they have to wait for their income to go up and they have to wait for the values to push up so that loan gets pushed down. Now, in this situation, you might be out of it in 2 to 3 years. So here's the downside to a cosigner. If your mom doesn't want to come off it when it's time to take her off it, that's your biggest concern. Here's her concern for cosigner. If you don't make a mortgage payment, it affects her credit.
Mommy's got to save you.
Mommy might have to save you. But if you're a good man and you make your mortgage payments and make it happen, if she's a good mom and comes off when she needs to, no harm, no foul. It's a very popular mechanism. We've been adding people to cosigners and taking them off for years. So I hope that helps, AI Tattoo. Zachary McFay, Great Depression.
The Great Depression. That was a, yeah.
Is that a movie? Vicky, is government pension and SS considered strong income?
Probably one of the strongest income out there, Vicky. Vicky, are you an underwriter? Vicky, that sounds like an underwriter question. Government pension and Social Security income. Okay, so what you have to look at is the probability of this thing continuing. So if it is a government income, the government's probably going to continue. Yeah, it's probably going to continue. There's something right now, and I will say this, and it's horrible to say, and it's going to scare a lot of people out there. There's something called CalSTRS. CalSTRS is the California State Retirement System, CalSTRS. And they were promised $4,000 a month for life.
For life.
$4,000 a month for life. But the city mismanaged the funds, and some CalSTRS people, this is the first time it's happened ever, are getting notifications that instead of $4,000 a month, they're getting $2,500. We don't know how that's going to pan out in the long haul. This has just happened in the last 6 months, and people that were guaranteed income were finding out that only a portion of it was guaranteed from the state, another portion was guaranteed from the local municipality, and the local municipality didn't manage their funds correctly. So, it is very strong income. It is. But for me to say it's ironclad, 6 months ago I would have said ironclad.
Yep.
Today, I've seen my first case where they're like, hey, I went from $4,000 to $2,500. Now it's going to go through the court systems. There's going to be lawsuits. There's going to be a lot of stuff that goes on. And I believe it will go back up to $4,000, and the general fund will cover the local municipality. I believe that that's how it's going to work out, but there's a lot of stuff going on. Short of that situation, and only in California is the only place I've seen it, government pensions are as solid as they get. Social Security income is federal government. That's as solid as it gets.
Also, Vicky, for a loan officer to put your file together, super easy. For an underwriter to approve it, super easy because you do have guaranteed income, so they never question it. Miss Jasmine, $44,000 a year, want to buy another property, 766 credit. Only debt I have is my mortgage at $155,000. DSCR, question mark?
Miss Jasmine, DSCR is a good loan. It's a very good loan, but there's a catch to it. It's a big catch. So here's where I lose most people. 20% down. That's where I lose most people. And they're like, hey, Lee, your sign says 15%. There is one scenario where if you have an over 800 FICO and you have a ratio of more than 1.25, I'll explain ratio in a second. If you have a ratio of more than 1.25 where you can go 15% down, But most people, Miss Jasmine, are going to be 20% down. That's where I lose them. Then there's the next thing. And the next thing is the property has to pencil out. And this is where most of them fall apart. How does the property pencil out? Well, once I get that note, I'm going to figure out a mortgage payment. PITI, and let's say PITI is $3,000 a month. And then my ratio has to be 125%. So in order to make 125%, the local rents must be over $4,000 a month. So my mortgage payment is $3,000, but the local rents for that property are $4,000. It's about 125, maybe 130% in that range. But if the property meets that criteria, DSCR is an amazing loan. You do have to have a high FICO. I think it's 680, 720. 720?
Yes, in that range.
It's high. You have to have a pretty high FICO score. But if the property pencils out, then it's an amazing loan. It's an amazing loan. It does not pencil out on the West Coast. It does not pencil out on the East Coast. California, forget about it. Forget about it. Not happening. In New York, forget about it. Florida, forget about it. Some parts in Texas, like Houston, Dallas, Austin, forget about it. But you go to the lower parts like Michigan, pencils out of Michigan, some places in Tennessee, some places in Arkansas. So if you can make that property pencil out, it's a great loan.
Yeah. AI Tattoo, pros and cons of my question above. I already gave them to you, but I'll say them again. So if your mom refinances, you can take her off in a small window of time, 2 to 3 years. If you don't make your payment, it affects her negatively. If she doesn't want to come off the loan, it affects you negatively. But the pro is you're going to have a house that you can call your own. It's going to have the smallest amount that you're ever going to owe on it with the smallest rate in 2 to 3 years from now. So those are your pros and cons.
So Zachary, can you explain interest just RQ? RQ? Real quick.
Oh, okay.
Okay, I understand 7%. 7% of what on a $100,000 house?
RQ.
That's a good question, Zach. Most people don't know to ask this question. Now, 7% is annualized. There's a difference between straight interest, simple interest, and compound interest. So let me give you straight interest because it's easier, and then I'm going to give you compound interest because that's where you're really at. Straight interest is this. If I borrow $100,000 and I have a 7% interest rate, at the end of the, you have to screenshot this. That's what it's, if you borrow $100,000 and you're paying 7%, you're paying a fee to borrow that money. 7% of $100,000 is $7,000. So at the end of the year, you would have paid back $107,000. Pretty simple. That's called simple interest, aka straight interest. But here's the catch. Banks use what's called compound interest. What does compound mean? Okay, so at the end of the day, they retaliate. So they say, okay, you owe $7,000 at the end of the year, but we compound daily. So $7,000 divided by $365 is $200 a day. So at the end of day one, you owe not on 100,000, but 100,000 and 200 because they compounded it. So now they recalculate the income and it becomes more than 7%. Income. Now, because they're doing it over 30 years, it becomes ridiculous. And if you understand compound interest, it works against you a lot. Let me tell you what that means. If you borrowed $100,000, just $100,000, and you paid back on the normal terms, you would probably pay back about $400,000 over 30 years. What? $400,000? $400,000. But Lee, I only borrowed $100,000. Yes, you borrowed $100,000 at 7% compound interest. And what's worse, here's what's worse. The banks hide behind all these veils of complexity. For your first 15 years, the majority of your PITI payment goes towards interest only, so you don't actually reduce your principal. Who gets to set that? The bank does. Why? Because they have the money. And it sucks. And just because I know how it works doesn't mean it sucks any less. It actually sucks more when you know how it works.
Dang, that was not real quick.
Yeah.
That was not our cue.
Sorry. Yeah.
That was not our cue. Anyway, everybody, load up the chat box. Keep asking more questions. The more you ask, the more we help. This is a community, so you're helping other people too.
Camacho in the house.
Yeah, increasing the likes.
We appreciate you, Camacho. Thank you for showing up. We appreciate you very much.
Dude, we got 1,800 likes just from Camacho.
Camacho's badass, man. We dig Camacho.
Vicky, 3 questions in. I think she's bagging on your real quicks.
Yeah, I'm not very... Sometimes I talk too much. You're like, hey, what time is it? I'm like, here's how you build a clock.
Vicky, FICO, 823. Ooh, half down.
Vicky, you can do anything you want. With an 823 FICO and half down, the banks...
government pensions?
The banks look the other way at a lot of stuff. You know why? Because 823... First off, that's not easy to get. The highest FICO out is 850. I've never seen an 850. I've seen an 846. That's the highest I've ever seen. I pull credit every day, many times a day. Sometimes we see an 800, 800 out of 3. Rarely do I see 3 out of 3 800s. But if you're at 823, that's amazing. That means you have 10 years of auto payments on time, mortgage payments on time, student loan payments on time, installment payments on. Everything's been done correctly. So the bank says, we're banking on you. So you're going to get the best possible loan out there. 50% down means there's almost no risk for the bank. They'll look the other way for a lot of stuff. If you go beyond debt to income ratio, you're probably in a good spot to move forward even with that.
You probably won't even need an appraisal.
Yeah, I know. You got an AVR appraisal waiver.
Come what was that? AI Tattoo, you're welcome. We're answering all your questions. A-Dub in the house. She said, hi, guys.
What's up, A-Dub? Great to see you. Vicky, remember negative amortization. Vicky, let's talk about that. So, there was a time when people were buying houses that they could not afford. They could not afford them. They could not afford them. There's a guy who comes in. He says, hey, I want that $1 million house. I'm like, cool. What do you do for a living? Because I'm a gardener. All right, cool. I make $40,000 a year as a gardener.
A month? I'll write that down. A month?
A year, yeah.
A week?
That's how the loan officers operated back then. I heard a month, $40,000 a month. You can probably get that $1 million property. Anyway, what they would do is they would put you in a NAGAM loan. So they would create a loan where you would make a payment, but the payment would not even cover the interest, let alone reduce any principal. And because of that, the loan was growing as you were paying. So if you borrowed $1 million, a year and a half later, it's worth $1 million. The loan's $1.5 million, even though you've been paying $2,000 a month for the last 12 months, because you never could have afforded that house in the first place. Those NAGAM loans became illegal for the most part, not all of them, but for the most part, when the Dodd-Frank Act passed in 2010, 11, and 12. So, NAGAMs, you're not going to be able to go FHA, VA, Fannie Mae, Freddie Mac, USDA. You're not going to get a NAGAM. They don't work that way. There are some alt-QM NAGAM loans, but that was the way people were doing things, and it's not pretty.
80/20s?
Yeah.
Zachary Maffei. So what's the best loan and best interest rate type rate to get into right now? Best case scenario, money down, etc.
You want to take that or you want me to take it?
Go ahead, man.
All right, cool. So
You're
what?
in the mood.
Zachary, it depends on your FICO score. What? Depends on your FICO score. Wait a minute. What? Okay, why? Okay, so let's just say I have a 622 FICO. Some people say that's great. Some people would say it's crap, but let's just say 622, okay? And then I put you into a conventional loan. With a 622 FICO, and you're doing 3% down on that conventional loan. 3% down. Well, yeah, that's a good down payment, right? 3% down. But because you have a 622 FICO, I have to shop mortgage insurance. Mortgage insurance is for anything less than 20% down. And because you have a 622 FICO, I shop your mortgage insurance and it comes in at 2.5. I'll explain what 2.5 means in a second. 2.5. That's huge. All right. Let's say that same exact file, but you have an 800 FICO. And I shop your MI. Your MI comes in at 0.17. 0.17. What? Okay, so that's conventional with FICO scores. Now let's flip it to FHA. You can't do 3% down, you have to do 3.5, but your MI is set at 0.55. Now remember the earlier scenario. 0.17 and 2.5. Well, what does that mean in actual dollars? On a $500,000 house, 0.17, call it $200 a month. 2.5, call it $700 a month. So the FICO makes all the difference in the world when you're moving forward with a conventional loan. On an FHA, you're set at 0.55. So when you say what's the better loan, my question is, what's your FICO score? If your FICO is 800, conventional all day, every day. If your FICO is 622, FHA all day, every day. There's a little bit of a difference in down payment because on a Home Ready or Home Possible, I can do 3% down, but on a standard FHA, I have to do 3.5% down, so that 0.5 is the difference. But the MI is going to make the big difference in your loan, and the only thing that's going to gauge that MI is your FICO score. Did I do a good job?
I think you did fantastic.
All right, cool. I appreciate
Pat
you.
yourself on your back.
I appreciate you. There we go. I double patted.
GRCA, what if a cosigner has a high DTI?
Probably won't work.
Probably won't work. This is what happened to pretty much everyone when the rates started climbing. So they were at, let's just say, a $500,000 purchase price. Interest rates jumped, which means we have to push down how much you can actually qualify for. So they can no longer buy houses in that same neighborhood. They had to move to an entirely different neighborhood, maybe a less desirable, maybe in a bad neighborhood, so to speak. So if your DTI is too high and you want to be in that specific neighborhood, here's your solution. Pay down debt, make more money, or get a cosigner.
Alaska Nina's in the house.
And she said Alaska here.
Alaska.
As if I would be confused.
Alaska Nina. I'm going to guess your name is Nina and you're from Alaska. I'm also going to tell you we can do loans in Alaska. I want to do a loan in Alaska. Nina, do you want to get a house? That's my question to you. Because if you do, I want to help you.
So you do the whole state of Alaska?
The whole state.
What about the whole state of Hawaii?
Hey, you know what? How far is Alaska from Russia? Do you know how far that is?
I can see it from my house.
Dude, that's Sarah Palin. It's like literally, it's like less than 100 miles, right?
So
it's
water's
less than
low
100
enough,
miles.
you can walk there.
You can walk there, yeah.
So
you
you do
take
the
one of
whole
your
state
little
of Hawaii?
canoes, you can swim. Whole state of Hawaii,
California?
state of California, Florida,
New York?
New York,
All 50 states?
all 50 states.
Oh, that's
You know
a lot
what?
of
Most banks can't do all 50 states. We couldn't up until about 3 months ago. About 3 months ago. We couldn't do New York and we couldn't do Hawaii. But we got the notification a couple months ago.
90 miles?
We can now do Hawaii and New York. And yes, we can do Alaska. I have so many questions. I hope I do your loan, Alaska Nina.
Alex Arden, thank you for the love. Zach
Appreciate
Maffei, is every loan compounded interest? Also, touch base on land contracts, best place to find them.
Okay, so Zachary, all conventional conforming loans are going to be compound interest. All FHA, VA are going to be compound interest. Why? Because it's a bank and the banks want to make money. And the truth is, they don't lie to you. They just tell you the truth in a very sophisticated way, so it's very difficult to understand what's going on. So when I told you the difference between simple interest and compound interest, they'll tell you right away, here's the compound interest. Yeah, it's compound interest. They don't really explain it like I just did. You're like, oh, okay, compound interest. That must be different. Albert Einstein is famous for saying, what's the eighth wonder of the world? And he said,
Chris and Lee team.
Christian Lee team, yeah. He said Christian Lee team. He said compound interest.
Oh.
The reason compound interest, okay, so here's a real quick scenario for you, Zachary. This is a way to understand compound interest, and it's a really, really good drill. Here's the good drill. And you don't have a lot of time to think about this. You have to answer fairly quickly. The count went up high. You have to answer fairly quickly. Would you rather have $1,000 a day for 30 days or a penny doubled every day for 30 days? You don't have a lot of time to look at it, but which would you rather have? So day one, you have a penny. Day two is 2 pennies. Then you have 4 pennies. Then you have 8 pennies. Then you have 16 pennies. Then you have 32 pennies. Then you have 64 pennies. Well, shoot, you're 10 days in before you break a buck. Seems like a simple answer, huh? That's compound interest. If you don't know the answer, I'll help you with the answer. At the end of 30 days, simple. That's simple interest, $30,000. You made $30,000. $1,000 a day for 30 days, $30,000. Pretty simple. Compound interest, a penny doubled every day for 30 days, $6,400,000. Don't believe me? Get your calculator out. Try it. Try it.
Unless you're Nancy Pelosi.
In which
then
case,
you take that 30 G's, you put it into a stock that you know is going to run up because you just passed a bill, and you make $1 billion.
Like that, man. Like every day.
Unless
Every
you're Nancy
day.
Pelosi.
So compound interest, it's a way of life. It works against you. It can work for you. It really can work for you.
Got a lot of questions. Just picking your brain. Thank you, said Zach. Alaska Nina says houses in Anchorage, Alaska? Oh, I'm in Anchorage, Alaska.
Love it, love it, love it, love it. What's the purchase price? What's the average purchase price in Anchorage, Alaska? We don't do a lot of loans in Alaska. I haven't done one in probably 5 years. You?
You said they're expensive.
See, was expensive in Alaska. Because I'll tell you what. Here's the thing. Some people in Arkansas, they're like, yeah, I'm going to get me one of them expensive houses. I'm not bagging on in Arkansas.
I'm going to get me an expensive trailer.
I'm going to get me an expensive trailer. This one's going to have siding and everything.
It's going to have two
air conditioning's on top. It's
No,
going to have two
we're
air
gonna
conditioners.
double-sided.
It's going to double-sided.
Double-sided.
Oh, we're
No
gonna
more
be in
single
trouble.
wides for me.
No more single wides. I'm moving on
I
up,
made it.
like the Jeffersons. Anyway, in
Moving
Arkansas,
on up.
I'm not beating on you. I dig. I've done some.
Double wide.
$200,000 is very expensive in Arkansas. No, $250,000, $300,000. Very expensive in some places. I did a loan in Mena where that's kind of a nice house. In California, I'm not kidding. In California, in Los Angeles, can't touch a house for $1 million. That's not expensive. FHA goes to 1.1 million. FHA, your first-time homebuyer program, 1.1 million in Los Angeles. I'm working with a client in New York, 1.4 million for a tiny little bitty 2-unit. 1.4 million. What? So expensive is relative. If you're in the Bay Area, shoot, 1.5 million. That's a starter home in the Bay Area. So tell me about Anchorage, Alaska. What's expensive in Anchorage, Alaska?
Brad Aiken, can I get a loan? But my friend is the one living in the house. What kind of loan is that, Lee?
Fraudulent?
No.
I mean, no.
It's an investment property.
Oh, that's right. Yeah. Yeah. So, yes, you can, Brad. That would be an investment property. For an investment property, you disclose, hey, I'm renting this to my friend. No questions, ifs, ands, or buts. You're going to need a 20% down payment. You're going to need to have a better than 680 FICO score. And you're going to need reserves for 6 months. What are reserves? PITI, principal, interest, taxes, and insurance for 6 months of that house and your primary residence.
All right. Vicky, am I the first buyer if I was on title with my ex years ago? What's years ago, Vicky? Because we need to know that. But here's the rule. You already get the answer. If you haven't owned a home in the past 3 years, owned any home, have not been on title in the past 3 years, you are qualified as a first-time home buyer once again.
Yeah, so the magic number, Vicky, is going to be 3 years ago. If that X is 3 years or older and dusty, you're a first-time home buyer again.
Yeah. Hugo, thank you for the love. Gio, he didn't say that.
Who didn't say what?
It's when you said someone something about the eighth wonder of the world.
Einstein, eighth wonder of the world? Is that folklore? No. Einstein? No. I don't know.
Well, Kennedy said if you don't know the answer, Google it.
Wait a minute. What's Google?
Elite Gods, a penny. He's going to take a penny.
A penny. That's right.
He's going to be rich.
A penny.
You're going to be a rich
now,
man.
that really is the power of compound interest, and that's the quickest way to understand it. And most people will not take that penny. They take the $1,000. If they sit down with a calculator, they figure it out at about day 26 or 27, starts to really kick in. And then you're like, hey, this seems like a scam on my calculator.
Yeah. AIPAC killed Kennedy. What's AIPAC? AIPAC.
Tupac's brother?
AIPAC, eh?
It could be. Well, AI is artificial intelligence. Tupac.
I am Tupac.
Tupac was this
Pac.
rapper a while back that
Thug life.
Diddy didn't like for a while, and BAP! So AI Pac is probably the artificial intelligence version of Tupac.
Thug life.
Yeah, could be. Yeah,
Okay,
cool.
I like it.
I rented Newport Beach, California.
What?
My neighborhood's
How
homes
much is
are
that rent?
15 million. Oh my God, 15 million. Yeah.
What's that red payment, Vicky?
Yeah, Newport Beach. that's some stuff right there.
But it's gorgeous.
I know Newport is awesome.
We rented
Newport
a house there about a month ago, 2 months ago.
Yeah.
And freaking amazing.
He's a baller. He rented. He's like, I'll just take one in Newport. I'll rent it for a while. I'm good with that.
I'm not going to keep it. Rent is 5 G's. That's not good. That's,
5K? Yeah, 5K for Newport. That's amazing. That's pretty amazing. Newport is badass. We love Newport.
Are you Airbnb in this, Vicky? Is that what it is, or is that just your regular contract rent?
So
I need to know.
Who is AIPAC?
Yeah.
AIPAC.
So who's the person who wrote that?
I don't know. Just somebody just laughing there, just laughing. Who is that?
Zaid Squad.
You got
Zadie Squad.
He's got 517 followers. He's probably not a little bot shill.
So Zadie Squad, what is AIPAC? We need to know.
Yeah,
because if you have the answer,
you have my guess. Yeah, you have my guess of Tupac.
I love my landlord. Been here 6 years.
Vicky,
oh, okay. So she
sounds like you got. Yeah, sounds like you got the hookup. We call that the hookup in the real estate industry. By the way, there's some things going on right now. There's some things going on. These are the very important people in your life. Who's this? Anybody? Who's this? Who's
your
this?
High school sweetheart.
My high school sweetheart. No, it's Janet Yellen.
Okay.
Janet Yellen. Okay. There she can. Well, she kind of controls the Fed. Yes. Who's this? This is Jerome Powell. He's the chairman of the Federal Reserve. She's the Secretary of Treasury. Who is this? That's Sleepy Joe. He's taking a nap right now. Okay? Between all these guys, they get to elect these guys, which are the FOMC.
What does FOMC stand for?
Fair Open Markets Committee. Oh, you thought you were going to catch me. This is the Federal Reserve. This is the Federal Reserve. Federal Reserve are comprised of some very, very smart people, like the smartest financial people in the world who are predicting what's going to happen with the economy, not just housing. They're worried about what's going on in Russia. They're worried about what's going on in Ukraine. They're worried about wars, militaries, how everything is going to affect everything, because the world is largely dependent on the dollar. So these people set monetary policy, and they're not naive to the fact that they change the way the world operates. They change the way the world operates. And what they do is they say, hey, listen, everything's in cycles. When interest rates went up, it was not a surprise to us in the loan business. They told us, hey, in the year 2022, we anticipate many, many interest rate increases, and we got them. And we were like, nah, they're not going to do it. Nah, I knew they were. But they hit us hard, not a little bit. Like, we have friends who are making $1 million a year as a loan officer. They're now selling solar. That's how hard it hit us. So they knew it was going up. And when you listen to this guy speak, not this guy, because this guy's not fun to listen to speak. When you listen to this guy speak, he will say it goes in cycles. And the economy always goes in cycles. And he calls it cycles. So cycles go up and go down. This guy has come out and said, we believe we've reached the peak of this economic cycle, and we are prepared to hold as long as we need to. Where's the peak of the cycle? 5.2% to 5.25%. That's the peak of the economic cycle. Now, what everybody's waiting on is for the Fed to reduce the Fed funds rate. Because once they reduce the Fed funds rate, they've triggered a whole thing to happen. A whole thing to happen. And what's going to happen then? Well, the market's going to respond. Everything's going to go down. Bonds are going to go down. Mortgage interest rates are based off of the 10-year yield. The 10-year yield competes with the Fed funds rate. And because of that, 10-year yield's going to go down. Uncertainty in the market's going to disappear. And there's going to be a yield spread of 100 to 150 basis points on the mortgage rates, which in English means more rates are going to go down. Somebody says I should sell the solar too. Shit.
You should, man.
Man, this guy say
you'd be good at it.
You know what? The one thing I like about this is we get people giving us career advice. You know what? They're like, hey, you know what? You probably sell solar. You should probably sell solar. I'm like, yeah, I appreciate it. Yeah.
Sonny Gill, I want to know what you know. What's going on with the yen? I just looked at the chart and it looks like it's tanking. Looks like it's been tanking all year. What's going on with it?
Oh, this is a scary thing. Because, first off, the yen is Japanese. China is supposedly having a fake economy for a very long time they can't keep up with. They literally built cities. They built cities to let the rest of the world know that they were an economic powerhouse. Nobody lives in these cities.
Is this the population
Fully
issue?
functioning cities. That's a whole different thing. But fully functioning, gigantic, vacant cities. Put that in Google.
Like street lights going off and on?
Like yes, like the water running, the toilet flushing.
Who's
Nobody
flushing the
lives
toilets?
there. Nobody lives there.
Who's flushing
They
the
got one
toilets?
guy come by and flushes them all.
Oh, okay.
They pay him. It's a good job. So there's like fully functional cities in order to let the world believe that China is an economic superpower.
Do they really want to fool us? China?
I don't know why, dude. I doesn't.
The one that makes all of our products?
It does not math out. It doesn't math.
They're
But
communists,
anyway,
man. What do you think?
they're supposed to be on this gigantic crash, and the yen's right behind it. And then, if you follow the conspiracy theorists, the dollar's right behind it too. And that's when I talked earlier about a gigantic crash happening in 30 to 32. That's when the best guesses are that the U.S. could hit another cataclysmic crash in the year 2030 to 2032. I don't know if I all the way buy it, but I do get how they build their case. I get it.
All right. Ben says interest rates are going down in the next 6 months, which means bond prices are going to go up. Then
Ben. I don't agree with you. I do like where you're talking, though, but I don't agree with you.
He said the real estate market was severely overinflated and their developers defaulted on their debt.
Ben, it depends on what you're talking about. Because I do agree that the commercial business is in a pickle. They're in a pickle. They're in a big pickle. But the residential business, whole different game. And here's my proof behind that. Or here's my theory. I don't know if I can prove it. Here's my theory. Okay? Do you know who's buying all the single-family residents, or at least 40% of the single-family residents across the country? Do you know who's buying them? Small holding corporations. And do you know what the exit strategy for these holding corporations is? They sell to BlackRock and Vanguard. Why? Because BlackRock and Vanguard are too big to go look at a single-family residence. So there's actually a business model of hedge funds who go out and buy these houses so that they can sell the entire company to BlackRock and Vanguard and make a fortune, because you know who wants to own these single-family residents? BlackRock and Vanguard.
AI.
Do you know why? Because the population of the United States has dramatically increased, over the last 10 to 20 years. Currently, we're sitting at about 342 million people right now, 342 million. And do you know what has not increased? Housing. I know it's expensive. I do. I also know that the pent-up demand is incredibly, ridiculously strong. And when rates come down, he who holds the inventory runs the show. And you know who wants to run that show? BlackRock.
AI.
Vanguard. And at that point, they can come out of those houses to these people, and that's when that cataclysmic crash that I was talking about in 20 to 2032 is going to happen. If you really want to be rich, that's the time you need to know.
We should build some ADUs.
ADUs? What do you want to do about an ADU?
Ben said it's not 40%, it's significantly smaller. What's he referring to?
The acquisition of the single-family residences across the country. And it
who
does,
owns 40%?
and it does depend. It's not happening in California. It's not happening in. You're right. BlackRock is also the largest investor in mortgage securities. Yeah.
Okay, so if you really dig into BlackRock
Yeah.
and Vanguard, they're the largest investor in almost every important sector on this planet.
They're bigger than anybody. They're bigger than they're so big. If there's anybody that's too big to fail, it's these people, these entities, these whatevers. But they are buying it up, and they're not buying up you're not Los Angeles, not New York, not San Francisco, not Florida. Well, not the big areas in Florida, Miami. They're buying up these small mom and pop areas, and and this is quiet unless you know to look for it. It's happening like beneath the scenes. We talked with a guy not that long ago who's building ADUs to sell the holding corporation to BlackRock. That's his exit strategy. He wants to just build ADUs, have a portfolio of ADUs, and then sell it to BlackRock.
Danny D, on my mortgage statement, it shows I have escrow balance. What does that mean?
Danny, you tell.
It's not free money, man. Don't go taking that out and trying to gamble with it. It's not free money. It's
So-
going to pay your taxes and your insurance twice a year. So your insurance once a year, but your taxes are due twice a year, at least here in California. And it's going to pay those balances. So when you make your mortgage payment, you're paying principal, interest, taxes, and insurance all in that one payment. Portion goes to principal, portion goes to interest, portion goes to taxes, portion goes to insurance. So that escrow account is holding that balance for your taxes and insurance, and the bank will automatically disperse it and make your payments so you don't default on your taxes. Why? Because if you default on your taxes, then Uncle Sam walks in and says, "Give me that house." And the mortgage payment does not want that to happen. I mean, the mortgage company does not want that to happen, so that's their security inside of this.
So we appreciate you on Facebook, Instagram, TikTok, and YouTube. 2 more questions, and then we are out. Do you guys offer hard money loans? What do you say?
I say I can connect you with someone that can.
Okay, good. And then 2, BlackRock is not buying all individual houses in the United
buying
States.
portfolios.
Correct. Ben, you are correct. It would be politically suicide for them to do that, so they don't. It looks bad. You know what they do? They write a gigantic billion-dollar check to a small company that does nothing but buy single-family residences. So they can legitimately tell everybody, we do not buy single-family residences, because they don't. They buy holding corps that do. You know what? We've been Chris and Lee. We appreciate you. We are out.